Hello and welcome to the technical market update. My name is Beyond Dale. They say a picture is worth 1,000 words, so that's why it's important to see exactly what is happening in the markets visually. Okay, so we have in front of us a chart of the Dow Jones Industrial Average, and what we can see is that the market made a new high and pull back slightly from that new high. As you can see, the market made a new high just below the 17,400 level and has pulled back slightly and closed at 17,113. So what we're looking for is support down by these lows right here. That's preliminary support in the market, and also at this low. Now if we see that the market declines below this low, that wouldn't be too much of a problem. What that could indicate is that the market is pulling back slightly. But if the market trades below this low, that could signal some problems for this broader uptrend. That would indicate to me that the uptrend is weakening. So that's what we have to keep an eye out on in the Dow. Similarly, in the S&P 500, which is the broader market index, the chart looks similar. We see that we have a broad uptrend. The market is in an uptrending environment. That's an uptrend line. And we see that the market did make a new high just above 2,000 and pull back slightly. Similarly, the market may pull back, but if the market closes below the 1900 level, that will indicate to me that the market is undergoing a deeper pullback. And if it closes below these lows at 1830, that would indicate to me that the broader uptrend may be in trouble. Now, support is at 1950. Support is here at 1950 and down at 1900. And resistance is at the old high, which is 2019. That's where resistance is currently. If the market does explode above the 2019-2020, we will be in for new highs. So there's no real resistance above the market if it does close above the 2020 level. Taking a look at the Nasdaq, the technology sector, it has had a very good run in its uptrend, but support is currently down right at the 4,000 level. That would be support, as you can see by that horizontal line. That is support in the market. If the market closes below this low down at 3850, that will indicate to me that the market is in for a deeper pullback. So technically the Nasdaq looks a bit stronger, but keep in mind the levels discussed, 3850 and just below 4,000. If it closes below 4,000, that wouldn't worry me too much. But the 3850 will start to put up some red flags. Remember, that's one of the reasons we look at charts. A lot of folks are calling for the market to suddenly decline, suddenly to crash. But just because the market declines, that does not mean that it will decline forever and then turn into a bear market. See, back in the May-June period, we did have a decline for just over a month and a half, but the market did not take out important support areas. So this was just a mere pullback, and then the market continued up to the upside. Similarly, in August, you had a slight pullback and the market went up to the upside. So when you have a series of higher highs, higher lows, you are still in a broad uptrend in the markets. Okay, taking a look at the US dollar, we have seen a pretty strong rally in the dollar, and the market bounced off of support in May. We can see in mid-October here, you had a low, and the market retested that low in early May of this year and has rallied quite significantly ever since. This is the daily chart of the US dollar index, and this rally in the dollar has caught a lot of folks by surprise, and that's why it's important to look at charts. So while folks are calling for the dollar to fall apart, we see that it's rallying. So you keep looking at the charts to see what exactly the market is telling you, and not listen to pundits who make forecasts and are often wrong. Follow what the market is telling you, and currently it's telling us that the dollar is in an uptrend. At some point, this uptrend in the dollar will end, but for now, it's in an uptrend. So we're on the long side of the US dollar, and that dollar weakness played out earlier in the year via the euro. This is the euro versus the US dollar. The declining chart shows us that the euro is declining. That's just how the currency is paired. It's euro versus US dollar. So when the euro is declining, this chart declines. That's just how the pairs are done in the forex market. So we have a significant decline here from a high of just below $1.40 to a low currently of $1.2689 in the euro currency. And taking a look at the British pound, we see the market has declined significantly also, from the highs of 172 down to just above 160. But the interesting market currently is the recent strong decline in the Australian dollar. And we can see that the US dollar rallied significantly from the May period, but you can see here in May, when the dollar bottomed, the Australian dollar was holding up pretty well and was in a consolidation pattern. But you can see that in early September, the market broke out of this consolidation pattern and is declining swiftly. And that decline could be fueled because of the decline in gold. This is the cash gold market. And we see that the gold market has taken a pretty significant decline and is now coming up on important support points. We see support here down at just above 1200, support here, and the market is coming to test this area of support. Now, a rule in chart analysis and technical analysis states that what we're experiencing here is a big triangle. As you can see, it's a triangle, and this triangle is pretty significant because a rule in technical analysis states that normally when a market breaks out of a consolidation pattern, which a triangle is just a consolidation pattern, we could get a big break in the direction that it breaks out. So for example, if the market breaks below this triangle and closes below these support areas here, we could see a pretty significant decline in the gold market. That could take the market down to $1,000 even 900. We see room for the market to decline to the $900 level off of a break in this triangle. If the market breaks to the upside, it could possibly signal the return in the uptrend. But curiously, the gold is seasonally strong in late August till October, into November sometimes. So we're in a period of we're in a seasonally strong period for gold, and we're seeing that the market is declining. So that is definitely worrisome for the gold market and for the gold bulls out there. And as I advocate normally, when you're making investing decisions, follow what the market is telling you. Follow the trends in the market. That's why price analysis is so important, because it tells you exactly what the market is doing. So you're not investing and hoping. Now, at some point, gold may turn around and start to move to the upside, but it will be reflected on this chart. So you will have an opportunity to get in the gold market. But it doesn't make sense that since when the market topped out in July 2011, and we have seen almost a 40% drop in gold, minus 40%, while in that same period from July 2011 till now, we have seen over almost an 80% rise in the stock market. So this S&P 500 ETF, so minus 40% decline in gold since July of 2011, and from 110 to just about 200, it's about roughly at 80%, if my math is correct, plus 80% rise in the stock market. So that's one of the reasons why you mustn't invest emotionally and follow a lot of what the conspiracy theorists are saying, because this has been a losing investment ever since the market topped out. So that's why I always advocate that although you may feel emotionally about a particular asset, you must follow what the chart is telling you. And the chart has been telling us that the stock market is in an uptrend. So we move money from losing assets into what is winning. Okay? So that's really a broad lesson on how to invest. Now, I'm not saying you must invest in the stock market, no, because it's making new highs, and a lot of the move, in my opinion, has already been made. And if there are new buy signals in the stock market, we will reflect that in these market updates. Okay, taking a quick look at the oil market, we see that the market is in a broad consolidation. This is a daily chart of oil, crude oil, and we see the market has been consolidating and has not really been doing much. The price ranges from about 115 down to the $80 level. So this market is not really doing much now, and until we do get a break above or below this triangle, as you can see here, we don't expect much from the market. If the market does break significantly to the downside, that could signal a huge decline in oil. But if it breaks to the upside, it could signal that the market will attempt to take out these new highs. So again, that's why it's always important to follow what the chart is telling you. Okay, thank you very much for listening. I hope you enjoyed the market update. If you want further market updates, there's a link below this video. You can sign up to receive these market updates there. You will get them every week. And I hope you enjoy them. Click on the link below, sign up, subscribe to the market updates. And thank you very much for listening. Thank you.